Good afternoon, traders. This is Christian from Traffic Trade Group, and this is your end of day market recap for Tuesday, April 23rd. Really nice follow through price action for today. We'll talk about some short-term index levels that just to kind of recap or conclude what I talked about in yesterday's video. Before we do that, risk disclaimer in front of you. Everything that we're going through is for information purpose only, not giving any advice or recommendations. So really nice outperformance today by things like the Qs, which were up 1.5%, small caps up 1.6%, micro caps also up 1.4%, and the SPY was no slouch today either, which was up 1.2%. All right, so I just updated the numbers above here, but a couple catalysts for the day that I thought were interesting. Number one is the economics that we got in the morning. This was at 9:45 in the morning. We had PMI data, which I think was one of the catalysts for the day. And I know this is a bit counterintuitive because you think, oh, geez, look at these numbers, they miss, right? They were lower than expectations. Manufacturing came in at 50. Services and composite came in at right around 51, so less than expectations. So immediately what happens when right now when you get economic data like this, and by the way, PMI is a leading indicator, right? There's other indicators that are lagging indicators. This isn't one of them. It's more of a leading indicators, just like stock prices are, right? So immediately what happens is bonds rally, which means interest rates go down, and the dollar goes down as well, right? So that kind of drives risk assets, right? That's the way that you want to be thinking about it. Sometimes people think, oh, that's not good, the economy is slowing down, right? Well, remember, the economy and the stock market are two different things. So that actually drives risk assets when you see bonds rally right now. And what I did was I went long the small caps today for a day trade because I just knew that more often than not is the reaction that when you've got a move in interest rates, right, those small caps are going to be pretty darn sensitive, and that works in both ways, right, depending on if rates are going up or going down. So that works really well for a trade, and that was one, like I said, one of the catalysts today. Now, bonds did give back, bonds, and this is kind of notable to kind of pay attention to for the rest of the week. Unfortunately, bond auctions are not one of the things that I really want to stay, have on my radar, but they are larger than normal bond auctions that we've got going on. And we had the 2-year today, we'll have the 5-year tomorrow, we'll have the 7-year. The silver lining is that you don't have any Fed speakers to worry about because they're in a quiet period until next Wednesday, but you will have to deal with that. Also, economics for tomorrow, while I've got the calendar, the regular calendar up, PCE deflator will be the main thing. GDP will be out this week too, but again, GDP is a lagging indicator. It tells you what happened months ago. But the PCE deflator is the Fed's preferred gauge of inflation, not necessarily the market's. The market is always tuned into what the CPI report is, but nevertheless. All right, so look at the things that rallied today. Clean energy, silver miners actually came back today pretty decently, but the home builders, cryptos, semis were up 2.4%, recovering a little bit. So I want to go through a little bit. I'm going to go through some charts, of course, in this video too, and some things that I'm watching going forward. But, just to kind of go back to where we were, and I'll kind of go through, by the way, here's Tesla. But I want to go through like what kind of gave us a signal that this was more or less going to be a regular dip, right? 5%. I call that a correction as well, but there was things that were really kind of lining up last week. So I'll come back to Tesla in just a second because I want to talk a little bit about that and their results. But if you look at what we did for this week, and this is pretty much complete, right? So this is the 80% rule. It's important to kind of mesh certain indicators as well as what the price action is doing. We want those things to line up, right? And there were some boxes that we were able to check last week, right, in terms of some of the indicators. So number one, we finally made this turn, right? So this is something that I talked about last week, was that price kept on getting rejected at these moving averages. But right in the beginning of the week, we started to make this turn. So do you see the difference here, right? And how this is notable, that once you finally, if you're moving down like this for several weeks, as we were, and getting rejected at these little moving averages, right? Once we make that turn, it's a change, right? And even though we sold off at the end of the day, my thought was, and this is where the value areas and the MarketWebs really helped me. And by the way, you can get a trial of this if you go to marketwebs.com for TradingView. But really, they just kind of keep me disciplined. And I said I was going to be long, provided that, and I executed this with an S&P call spread yesterday. But I said I was going to be long as long as price was going to stay above 50.27 in S&P futures, right? Just keep it simple, have those rules. And if we slipped back below, right, then you unwind some risk. But that's all it is, guys, in trading, is basically have a level to go long against, make sure that you're seeing some things kind of confirm. And I want to go through the rest of the indices for you. That's just the 1 hour chart. Note that we are going to be dealing with, if we continue to push higher here, right? And I can't really tell you what's going to happen here. We'll watch for, divergences when we get there, but another 1% up is basically where we're going to hit some resistance. And that's the bottom of the April value area, if we begin to kind of continue to move up here. And then we could see a number of other scenarios. We could, of course, see a recovery back up. We could as well, get rejected here and maybe put in some type of like a W type pattern, right? We see those from time to time too, right? And a lot of that is going to depend on earnings too, but at least we know where our resistance is, which is 51.57 in S&P futures. Q's made a nice little move today. Even though we did not take out this lower VPOC, that's okay. We got back above the 5-period moving average too. That was something else I've been talking about recently, how you don't really have a change in tone until you get back above the 5-period moving average, right? So you're going to have some overhead supply in here, unless there's going to be some really strong earnings reports that we're going to get for the rest of the week. Also, the bullish 80% rule is in effect over here as well. 433 is the resistance. I'm just going to keep going. You could write down these levels. You could pause the video as well. IWM also, which was the first one to kind of make the turn yesterday. It actually did get above the 5-period moving average yesterday. And we'll have some resistance here about 1.7% up. That's 202.05. Also, price did make it out, and this is where I bought this morning. And I think you can see this. I used TNA, which is 3 times. So again, this was right after those numbers oops, this is right here, 946. So a minute after those, right as those numbers were coming out is where I bought that. And again, I was just kind of looking for a scalp, and got that. And we'll see if this wants to continue. Maybe set an alert right around this high at 199.10 for continuation in small caps. All right, so that's the indices really quickly, but I mentioned some of those indicators, right? So, one of them was that breadth started to really improve last week, right? Once we got to, and this is in my midday note, so you can find this. Let me just bring this up for you. All right, so this is, if you go to ttgtrading.substack.com, but I tweet this out, several times a day, my midday note. But you're going to find things like this, where I talk about breadth. And I've mentioned the last couple of days that breadth was improving, and I showed this in yesterday's video too, right? And this was another step in the right direction, right? This is the first time, I think, since the 2nd of April, right? And you could see this down here as well in graphic. Bloomberg does a nice job with the 4-week new highs in the S&P versus the lows, right? So you can see down here, this means that the lows were increasing, right? And then they really started to back off, I think, after April 19th, right? They really started to lessen and lessen and lessen. So we had some divergence, right? Like a positive divergence, right? And now you could also see that the new highs are picking up. So again, these things are moving in the right direction, right? And this was not updated for today, by the way. There's always a 1-day lag. But yeah, it's the first day, I think, I think you have to go all the way back to in here where the new highs outweighed the new lows. That's that's a good few weeks ago, right? So first time that we've seen that. So again, all of these things are like, they're just telling you that things are improving, right? Not only is the price action, but also under the hood, right? We want to see, as the market goes up, we want to see confirming factors. Okay, so that was the first thing. The other thing was the VIX, right? We saw a couple days last week where the VIX was actually going lower with the market, right? And so that's a pretty good signal, right? And I tweeted about that a couple times last week. I said, hey, this is, and it happened 2 days in a row where the market was, where the S&P was down for the day, but so was the VIX, right? So normally what happens when the market goes down is the VIX goes up, right? It means like volatility, because the market usually goes down faster than it does when it goes up. So when you see the VIX go down and the S&P go down, that's known as a positive divergence, right? Someone always will try to heckle me a little bit on Twitter because they're like, oh, you don't know what happened with the VIX today, da, 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 da. But actually nobody did that this time. So again, it was a pretty good signal. So if you look at the VIX now, and we'll bring this up in Bloomberg, but so like this is an important point. What I try to do all the time is, I don't usually use this market shtick that people do where, they're like, oh my God, they're trying to get clicks on their tweets or whatever. And they start to talk about, oh, there's the volatility is going up. And I said a tweet last week, I'm like, maybe it's for some new people on Twitter or whatever, that they've never seen a VIX of an 18, but it's really not that big of a deal. And usually when you see a lot of people tweeting a chart of, so this is another like sentiment gauge. When you see a lot of people tweet a chart of the VIX, usually that's when volatility is probably reached, the most that you normally see. And since then, this is where we were at the end of last week. The VIX didn't close anywhere near its highs. It really kind of gave back a lot of those gains. And since then, it's been falling, right? So again, understanding when sometimes it's just about a volatility versus a really big change. And, so I think we nailed this pretty well. And again, it's a little bit of just doing this analysis every day, right? And observing what the market is telling you, right? Not going out and making a prediction and telling people, oh my God, volatility is going up. This is going to be so much different, right? The sky is falling, right? It's to be calm, right? And to like, just understand what the market's telling you, right? And be a risk manager while volatility is going up and waiting for the appropriate signals, right? So that was something else. All right. So I mentioned going through a couple of charts, and I do want to talk a little bit about Tesla, which I'll bring up that chart. All right, so this is an important concept. I had a lot of people ask me about, hey, are you going to go short into Tesla's earnings? And my response was no, because we already know that, so first of all, Tesla has, from the last time Tesla reported earnings, Tesla's gone down 30%. 30%. So if you're trying to think that you're going to outsmart the market because you hear that they're doing layoffs and they're reducing the price of their car, right? If the price of the stock doesn't react at all, okay, then maybe you're on to something. But if the stock is falling on all of those headlines, right, then it's being priced into the market. So you're not going to outsmart the market by thinking that, oh, geez, I've been hearing all these negative stories about Tesla. Well, follow what the stock price has done, because a 30% haircut over the last quarter, it means that the brunt of the damage is being done. Now, going into an earnings, right? So nobody knows what numbers, and unless you're privy to beforehand what Tesla is going to be report. But you always have to think about things, and even more so with earnings, is what's the risk versus reward, right? And that and the conference call hasn't started yet, but that Tesla does come out with innovative products, right? They are the leader in EVs, or the innovator in EVs. Now everybody's kind of caught up to them to some extent, but if someone's going to bring out a new product, it's probably going to be Tesla. Is that something that you want to be short into after a 30% move down? Now, again, I'm not saying that you had to go long Tesla either, but it's just not good risk to reward, given that all that bad news is already out there. and already into the stock price. All right. So same thing when you start to look at some of these other names, right? And I think Netflix was a good example of that too last week. It had already gone up too much from the last quarter. Take a look at what it's done from the last quarter. Even though, Netflix stalled out, over the last couple weeks prior to earnings, it still was up decently and more expensive than it normally is in terms of valuation. So it's not that Netflix reported a bad quarter. It's just that all the good news was already priced into the stock and it had already advanced at a decent amount. So that's not the case every single time, but the majority of cases, right, you want to think about what the risk to reward is and if the stock has advanced based on a lot of good news. Again, why am I going over this in the video? Because traders get this confused. Newer traders get this confused all the time, and it's the same thing. They get confused when they see that a company reported good earnings. Oh, look at, they had a really good quarter, and the stock falls, because if the stock advanced 30% in the leading weeks up to that earnings call, then it's priced into the stock. But I explain this, I do a lot of teaching, and I have to, go over these concepts all the time where I see traders confused, because it's you have to look at what the behavior of the stock has been. All right. So that said, here's, I mentioned this call spread that I put on. I also was, I kind of legged into a couple things. I was holding a name or two from last week, but the other thing last week too was the performance in the financials. Now, I've gone over all these, and I actually took some profits today in Wells Fargo. I took this trade off today. I really kind of caught this trade, right on the break. This was a name I was actually watching before, and I had an alert set. That's some of what I do, is set alerts at names. But, this was enough of a move, and it's tough to make a lot of money in something like this, because Wells Fargo doesn't go up $5 or $10. It goes up $3 or $4. But and I have enough exposure in this group. I got long Goldman Sachs yesterday, made a new high, and I'm also long a little bit at Schwab. Right. I also looked at the builders today too, because you had good results from Pulte. So I was legging into this BLDR position. I didn't add to it. I was waiting for some positive price action today. So this thing is still a bit, underneath the value area, but this is one of my favorite names in the building space. But another name that I think looks pretty good here is TPH. Now, unfortunately, a lot of setups that you're going to see, you do have to look to see when the name reports earnings, which is right here. Something else that kind of woke up today was just a lot more growth names, which is good, because I know a lot of traders on Twitter primarily focus on growth names. I don't know why you can't focus on both growth and value, but it is it is what it is. Some of them only like to trade growth names. So I thought that this Palo Alto looks pretty interesting. Note that where this fell down to on earnings. Now, normally I don't go after names that are weak on earnings, but I think Palo Alto, is one that I can make an exception over. Because again, sometimes when a name reports bad earnings, they're dead money for the next quarter, right? But this went down enough, it held support. And now after, now at this point, I think it's been a couple months, it's starting to kind of turn higher again. So I like a long trade here, right around 290. A couple other names that I don't know if I mentioned this one in yesterday's video, but IoT, Internet of Samsara, saw some call buying yesterday. Look at where this thing lined up, right at the top of value. This was a name that I put in the watch list for the week. By the way, if you're a member of Tribeca Trade Group, this is how we kind of set up the week, right? I come out with a watch list over the weekend, and then I kind of add names to it, right? You can see, and sometimes I, look at how I kind of structured it. A lot of the names from last week were a bit more like commodity energy names. But as the week goes on, you make adjustments, right? And you find names that might be looking pretty interesting. Interesting that some of the food names still did okay. Tyson Foods is not a big mover, but that name's up pretty nicely, right? And a few other names in here, but yeah, you could see how I started to add last night. I put these setups in the room where I was looking at AppLovin. Had a nice day today, but not as nice as Samsara. Another name that I'm still long to is P Diddy. Watch what this thing does here at 129.60. I took a bunch of profits in this already, but I'm watching to see what we do here at 129.61. Another one too that was strong last week, I would keep an eye on CPNG, right? This does have a VPOC that's about 2.3% ahead. So, you know, that could be a place that it sees some price you know, consolidation there. You know, still you can look to see what happened with app, by the way, you know, back on this, and this was something that I tweeted out, but virgin point of controls, and that's as far as it went. So that was a really good signal. Now back into the 50-day moving average, it looks much more attractive. All right, guys, that is it. I'm going to keep tonight's video short. Here's where you go to be a member of Tribeca Trade Group. It's not expensive. It's $129 a month. Again, what I basically do is try to just tell you when things are acting different, like the financials were last week, right? And provide give you a sense of like what's going on in terms of where we started to see those divergences last week. All of those things that I went over in today's video, these are things that I had in the weekend video too, where I really stressed those, that I thought that this dip that we were seeing and that we might get a bounce, we're going to be fairly soon, rather than the doom and gloom that you heard everywhere else. Have a great night, everybody. See you tomorrow.